Futures are a bit soft as we see some profit taking around the world. And while the Fed's exit plan is still being discussed, markets are still hanging tough. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call along with a special guest, Andrew Keene here from Keene on the Market, who has a very similar trading style to Scott, but he trades options, so he'll be able to offer us a different perspective today. So welcome, Andrew. Why don't you just tell us a little bit about what you do?
Yeah, basically I've been, similar boat as Scott. I've been trading for about 11 years now, and I predominantly trade options only. So I can make money in a strategy if the stock is flat, goes higher, goes parabolic higher, goes lower, parabolic lower. So I use a lot more strategy using options instead of stock. I actually get scared trading stocks because there's gap risk. Stock can gap overnight because stocks are, actually closed for a big part of time overnight. But using option strategies, I can limit risk and I can get good reward to risk setups.
What's funny is the way we kind of met on Twitter is he was like bantering me. He's like, why would you want to play a stock for 6-7 points when you can make a few $100% in the same idea, but trading it right with a different type of strategy? So, I talked to him. He's a little younger. You got to, teach him a little bit here and there. There are many ways to skin a cat, and trading equities is one way, trading options is another way. But I think really the best way to do it is somewhat of a hybrid. Do what you really know, like trading equities. And I also trade options. I'm just not as sophisticated. Mark, a lot of us do a little bit of both, and we're learning how to use options a little bit more. The same way with our community is trying to learn how to implement option strategies where, risk is premium paid around events, around earnings, for protection. So it's really nice to have Andrew here because, he specializes in this area, and I think there's not that many people as active on Twitter and about tactics and short-term, middle-term, so having you a part of the community today, I think guys will appreciate it.
Thanks for having me here.
I think we can expect a lot of banter today. I just have a feeling
maybe
a lot of banter is about to come. But before we get into some of that banter, let's just check in on the markets really quickly. It does seem as though markets are shaking off continued talk about a Fed's exit strategy. How do you think we handled yesterday, Scott?
We were down slightly, same way around the world. I think it's the second day in a row that Europe is down, so all the bears are coming out and saying, look at this, a new trend. Meanwhile, you add up both days, it doesn't even make up for one of the updates. But anyway, you look at the chart of the SPX and you'll see you have a really nice, this is actually more of your macro trend that hasn't been tested for a while, since almost a 50-day was tested way back here in April. This was your most recent breakout above a prior pivot. This pivot here was 1597. We went and gapped above it on the jobs data, and we're slowly extending higher. So right now, I don't think you need to get very bearish unless we finally close below a level. We haven't even been able to be, we haven't been below a prior's day low for more than 60 minutes, since the jobs data. So right now I would say micro uses 1620-ish level as support, and then more intermediate, if we were to break that, who knows, maybe we retest it, but for right now, I think the market's taking a lot in stride.
And we all know Scott, of course, has a portfolio approach, and you can do good hedging with options. So, Andrew, tell us, how would you ensure a portfolio with options right now?
Yeah, I don't like to trade the SPY put so much. I'd rather be playing the VIX, and when you trade the VIX, you have to line it up against the VIX futures. So if we look at the chart here, this is actually the spot, and then you have to line it up with the futures. So the front month future, the May future is trading 1380. The June future is then trading like a point higher, and every month you have to line up with the future. So I was looking at the August VIX, and the August VIX future is around 1680, and I can buy an out-of-the-money call spread. I can maybe buy the 18 calls, sell the 24 calls, and put on a bull call spread to protect a long portfolio, and the VIX is a pretty good hedge against it, just in case the market starts to roll over at some point.
Yeah, and if you use technicals, I can see why you're choosing both those strikes. Because you look, I know this isn't the exact same chart as the one you're using as far as front month, back month. For me, I'm not that sophisticated. You just look at this. You could look at the chart and say here, even on this chart here, realistically, this was the last time we rallied up. It went to about 18 or 19. So maybe if we do get some volatility this summer, you buy these, and then the next level here doesn't come in till about, what is this, about 23, 24. So that would be your middle. You buy this, you sell that. Hopefully you take that, the middle, and make a lot of money with your options along the way. And when insurance is cheap, when the VIX is trading down here, that's the time you want to buy it. And I do think, going out a few months into August, just in case we get summer volatility, makes sense.
Yeah, I like to buy insurance when I can, not when I have to.
Exactly. So it's always cheaper before the flood or hurricane hits.
Well, we know that sector rotation is continuing in this market. The banks are holding up well. And actually, Andrew, you don't like to play the banks. Why is that?
Unfortunately, I've been on the flat side of the banks over the course of the last year and a half. You know, the banks continue to be very, very strong. Last year, you know, 4 of the top 5 performers in the S&P 500 futures were the bank stocks. I've been playing them flat. You know, I don't really like their business models. I don't know how they're going to make money. Their trading desks aren't making money. Interest rates are very low. It's hard to lend out money. They have European exposure. You know, if we look at the banks, you know, some of them, you have them a little bit more neutral. I was looking at Citigroup. Citigroup looks very, very strong. I was looking at maybe buying some June 50 calls today. I was going to spread them off and sell the 52s, but the 52 calls were only like 20 cents. So buying those June 50 calls, you know, I'd rather be long Citi and maybe play that against a short Goldman call spread, or maybe do a Condor and JP Morgan. But I think Wells Fargo, I'm long some calls in Schwab actually as well.
Okay, so you just went through all of them. So we got to bring it a step back. First thing, is this your first long trade in the banks after the last 3 or 4 months?
No, I had some long calls in Wells Fargo, and then it bothered me at night. I think the next day I sold them.
So Wells Fargo kept you up?
No, Wells Fargo is, you know, is my favorite bank. You know, they have the most exposure to the real estate market, and they don't have the European exposure. If you look at the chart right here, it looks a lot stronger than the chart of Goldman too.
Yeah, so okay, so you look at Wells Fargo. Wells Fargo has been a great investment vehicle. Didn't get as beat up in the financial crisis, and you know, hasn't been an unbelievable trading vehicle, but you had some pivots to buy, and I do think it can continue. I think if you're looking for a bank that, you know, Warren Buffett owns and likes and doesn't have crazy moves, Wells Fargo is there. As far as Goldman Sachs, all right, I've been looking at this chart, and I think that it has shown a lot of signs of strength, this being one of them back in December when it broke above 121 and then followed the 8-day moving average the entire time all the way to its peak. Now, just real quickly, Andrew, you know, when a stock follows the 8/21 day for multiple months, would you say that's bullish or bearish?
I use the 9 and the 26 to be honest.
So if it followed the 9.
But yes, I think it is. But if you see here the way Goldman's performing right here, it hasn't closed above this 150 level since March, I think. So it gets above this, it gets right to this 150, 151. You know, if I look at a chart of this, I wouldn't mind maybe selling the 150, 155 bear call spread. I looked at this yesterday, and I can get about $1.90 for it. So I can make money if the stock is flat, goes lower, as long as it does not get above 151.90, and then maybe to hedge it, I can buy some Citi calls because they will work, you know, kind of together. So I like the chart of Citi much better than here in Goldman.
Okay, well, Citigroup has made new highs in the year. Goldman's been lagging, but you know, I think it's at a point where you've had such a big move in Goldman, like you saw from 121 to the highs, that right here, you know, I also agree. That's why you have resistance points, and that's why they become pivots. So, you know, for me, I'm long a little Goldman. If Goldman were to break above this pivot that shorts don't think it can, that would be a nice action area, and that would be my add for potentially a move back to the high. So as of right now, I do feel if you are short Goldman Sachs, this was probably a spot where guys would cover. That's why it turns into also a good inflection point to buy.
And Andrew told us about his option strategy in Citigroup. What do you think of Citigroup?
Citigroup I like. I'm actually not long it right now, but relative strength-wise, nice bull flag above a prior pivot. This is showing relative strength to Goldman Sachs. But you know, I kind of, you know, I don't like to have like the 10 longs and 9 shorts, or 2 longs in one group and 2 shorts in another. Like my style is being directional. The banks are going up, I'll choose which one has the best setup, but versus being short one, long another, and that, to me, I think just takes away some of your, you know, profit potential, because you have to be so right. You have to be like, okay, Citigroup's going to outperform so much to counteract my loss and being bearish on Goldman. So it's just a little bit tougher.
The Goldman strategy I talked about, it's also a bearish to neutral strategy. So if the stock doesn't move at all, I can still make money on this trade.
Okay. Now, how about Bank of America still holding above the 8-day, which should bode well for keeping momentum intact?
Yeah, this one's given us so many different entries since last August, from 8 to 995 to 1165. You know, the last entry we had here in Bank of America, you know, was right when it went above this 1241. You know, that was when we talked about it was your add, and now it's flagging above prior resistance. So I would say the longer it stays above this 8-day moving average, you know, the higher the probability we get another move to the upside. My yearly target for this is higher. It's probably 14 to 16, which we talked about in the December thesis. You know, so we're still on our way, and it's stair-stepping higher. I still like it, but again, sometimes you're intermediate overbought. I think within a few days we'll know whether or not we get this extra cash flow trade to the upside.
Staying away from Bank of America?
Yeah, I mean, I was looking at Bank of America too. You know, the premium levels are a lot cheaper. You know, it's not going to be one of these things. When I buy out of the money calls like in Citi, I call it FAR. I need a fast, aggressive move in the right direction. You know, Bank of America is not one of these stocks that's probably going to really rip like 50 or 60 cents. I was looking at selling maybe some bull put spreads. I think there will be buyers in this. You know, if we look at Bank of America at around this 1250, 1260 level, if it dips back down there, there'll probably be buyers. So I was looking at selling June 13, 12 put spreads.
What would you do with JP Morgan? Morgan, the standout in the banks yesterday, outperformed the peers and finished the day up nearly 1.5%.
Yeah, I was looking at JP Morgan. I think this is the most neutral chart. You know, when I look at option strategies and I look at I can employ so many different strategies. And JP Morgan, one I was looking at yesterday in June, was doing a condor, an iron condor, which is selling an out-of-the-money call spread and also selling an out-of-the-money put spread. So I was looking at selling the 50, 52.5 call spread and also selling the 48, 46 put spread. So on this trade, I can get about $1.20 of it total. You know, my break even is going to be around 51.20, which is above, you know, recent highs. And to the downside, you know, my break even is going to be around 46.80. So I make money in that range where I think it might stay for the next month.
Which is interesting because when stocks are in their ranges, that's when my guys tend to lose the most money because you have to sell them when they look good, buy them when they look bad. They go back and forth. That's why we like to play breakouts because when they're in motion, you can get paid. So what Andrew's saying is he thinks for JP Morgan, we're going to see a lot of this. You go back to the chart, he's saying that, you know, this little inside range is going to go this far, and then this could go this far because, and then here's your macro range on this side of it, on the support, and this side of it on the resistance. So he's hoping that it stays within this over the course of the next, you know, I would say few weeks or months or whatnot. Short term, you know, I'm in a little JP Morgan. That's why if it were to get above this 49.99, you know, it turns into an action area because then you have an air pocket towards the highs. Same way, if it failed, there's your air pocket towards there. So I understand why he would want to, you know, do that type of strategy if he was taking a neutral bet.
All right, well, coming up, we're going to go in the trenches with high beta tech, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, which remains mixed. Let's talk Apple first, acting better after it found support at the 8-day, held above Friday's low of 450 yesterday, but remains to be seen how much upside there still is. What do you think, Scott?
Well, it's kind of cool because off camera, you know, we were talking about Apple because you've traded Apple a lot in your career. I think you said in the pit you were known as what in Apple?
Biggest trader.
The biggest trader. Okay. Hopefully that's consistent too, and I can tell by the tie, you know, you made some good money. I like it a lot. Anyway, with that being said, you know, I tend to trade Apple here and there as well. And obviously, it's been a crazy ride to the downside since topping out last September, you know, with very small tradable bounces. So the question right now is, what type of, you know, composure will it have moving forward? Where we've had a nice post-earnings tradable rally that's starting to stall. So everyone's saying, will Apple roll over to the downside and fail and go back to the lows, or will it hold higher for additional gains? So you look at the chart here of Apple, and you will see, you know, since the 700 high, you know, it's just been crushed all the way down to finally, here was your low here. This was what, 380-ish? So on earnings, or 385, it didn't go lower, it kind of reversed. And then we talked about 420 as the pivot, because this was the last support that wound up becoming resistance that we broke above. And then we broke above the 50-day and held it, something different. And we wound up stalling around 465. So for me, I remember trading this. We talked about it. I took the trade off into resistance, wanted to see if it could prove it could hold higher. So on Friday's close, I took it home long. Yesterday it was up a little bit. So for this to continue to the upside and stay constructive and have follow through to what was a spirited move off the lows, I think we need to take out and close above this 459.71, and then here's your next real pivot. And gun to head, I think that Apple goes to the 200-day at some point this summer, which is a little bit above 500. What do you think, Andrew?
I think it's headed lower. I like Apple for some reasons. You know, they have $150 billion in cash. They're doing a lot of things wrong, but they're doing a lot of things right, but they're also doing a lot of things wrong. Okay, so I think for Apple to go higher, they're in a show me phase. They have to do something with their cash. They have to have a huge stock buyback. You know,
didn't they just announce a huge stock buyback?
To 2015. They're not even going to give the money that they're making every year back. So that wasn't a big enough buyback for me. If you look at the chart here, I think 467 here is massive resistance. I think Apple's heading lower. If you see the S&P 500 futures on all-time highs and we go higher, 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 and if you look at the chart of Apple, it's in a downward trend lower. Every time Apple bounces, kind of like how GLD gold has been lately, every bounce is looking for sellers. So I think Apple's headed lower. But like I said, I always like to set up a risk versus reward setup. So the trade I was looking at was the June 445, 425, 405 put butterfly. On this trade, I'm buying the 445, 425 bear put spread, and then I'm selling the 425, 405 bull put spread. And I can do this for about $3 or $300 per one lot. My break even on this trade is 408 and 442. So if Apple does rip up to that 500 level, the most I can lose on this is $300.
It's not a bad risk reward. Continuing, like I agree, it showed relative weakness for the past quarter, and every trade has been trying to get away from Apple because there's been such better action in some of the high beta names we'll get to. But overall, you can make money with tradable setups. And for me, Apple's failed many times. There's been tradable bounces. You go back here, that's why you have to not really have opinions. Last time it bounced back here in November, it went sideways and failed. It shouldn't have done that if it was going to continue. Here was the start of 2013. Remember, everyone said, oh, it'll be different. Gapped up, couldn't hold it, failed. This time was a nice tradable move. You would have been very proud of me, Andrew. I did a nice call spread there. I think I did 2 of them. And then PS went above the 50-day, stalled and failed. So that's why, for me, I'm going to be very flexible here. I am long a little bit, but if it were to get below 450.48, my thesis would potentially change because then it's got to protect the 50-day, and if it doesn't hold that, then it's the same old Apple and it doesn't deserve the real estate on my screen.
I'm enjoying this back and forth, this banter. I'm wondering where you guys are going to stand on Google hovering at all-time highs. Scott, you want to go first?
Well, let's let Andrew go first.
All right.
One.
Google, I love. They're doing the innovation that Apple's not doing. The Google glasses, I'm going to be first in line to buy those. However, up here, I think it's gone a little bit too much, too fast. Google has almost gone parabolic. I'd rather be buying Google, or buying some call spreads, in the money call spreads on a pullback. I can't rationalize buying it up here. I'd rather want to pull back up to this, this 840 level where it broke out from. So, I don't want to be putting on initial positions. I don't want to be the last guy holding the long Google chips or the long Tesla chips. So I'll pull back into 840. What is resistance becomes support, support becomes resistance, and then I'll look to buy some in the money call spreads.
I fully agree. We're on the same page with this one. This one, is to give you a nice entry after earnings. You could have started the year saying, okay, I'm going to wait to see what Google does, and then after earnings, it cleared this descending channel. You go back to the chart here, you'll see this was your descending corrective channel. Here is what happened after earnings. So right there, that's your entry. Then once it went above the prior high, that could have been your entry. So I do agree up here. It's just not worth the risk. We're extended from the 8-day, we're extended from the 21-day. You don't get that many opportunities, though, it seems like, with Google to buy in the 21-day. So I think either you let it go without you, or like Andrew said, if it does pull back towards the 21-day, do some type of call spread, because I feel like with this one, the premium is so high that sometimes you do the right strike and the right direction, and you're wrong because of the premium, so a call spread probably helps finance it.
And the stock, is actually probably, like 50 cents wide when you're day trading it. So, yes. The options are a lot more tighter. You can trade weekly options, you can trade June options, you can trade a lot of different strategies for it. But I'm looking for a pullback always in Google and buying those glasses.
You look a little sharp in those glasses with it. You look very smart, serious.
You have to come back and show them to us when you get them. But let's talk Amazon, which has been able to pare losses from earnings. It closed above the 100-day yesterday, so has reclaimed the support now of all key moving averages. Continuation in store, Scott?
I stay away from this, because this one, when it looks horrendous and you should short it, it goes up. When it looks like it's going to go, it stalls, especially recently. We can't say that about the past few years, because the past few years, if you were an Amazon bull, you created wealth for yourself. So really, after the past 2 quarters that have been mediocre at best, the street continues to give it a pass, which I think they think at some point it's going to be a margin story and it'll get better and the profits will go up. But anyway, you look at the chart here, this is a choppy mess. I bet you with this kind of chart, my friend Andrew is going to probably try and sell some premium each way, because who knows, in the middle of the range, where the clear-cut direction is.
Yeah, I was looking at basically an even money bet that the stock goes lower. Like you said, I stay away from Amazon for the most part. It has been crazy to trade that stock, and you come in and you see the PE, kind of like LinkedIn was for a very long time.
Easy, LinkedIn is unbelievable.
Their PE is ridiculous. I actually love Amazon Prime. I get everything on Amazon Prime, but I can't rationalize being long. This PE. Look at this chart; it's just crazy. Every time you think it's just going to break to the upside, people get trapped out. After earnings, it sold off really hard, and the buyers came in. So this is a choppy chart. I think Amazon's really hard to trade.
I agree. I think it's an avoid.
All right, now how would you approach Netflix at 2013 highs?
Netflix is actually pretty crazy, and I think Netflix will continue to go higher. They have 25 million customers, so they have a lot of what people want. They have the content people want. They have mobile presence that people want. So I think they will get bought out by the end of the year. If you see 2 gap higher on earnings, it continues. It's interesting on the daily chart. It actually looked like it was making lower lows and lower highs for like 5 or 6 straight days, and then yesterday just ripped higher about $10 or $12. So I think Netflix will continue higher throughout the year.
Yeah, I think that guys are making more money on the long side, and you did have 2 gap ups, but at least Netflix trades by the rules. It breaks above a level, there's enough shorts in there, it continues, it pays active traders for being right, and recently on Netflix we had 2 price points. Both were on our price point sheet actually, if you look at the chart here. Yes, you had this big gap up after earnings, so this time was a little bit different than the last time because it came from a lot lower. So this gap up had followed through quickly, then continued before consolidating. So here was your gap up, sideways, sideways, sideways. Here was one buy price at around 210, and then it cleared this resistance. So if you were short, you had to cover. We closed at 229. I don't know about a buyout. All I know is that it's been a great trading vehicle for guys focusing on it. And at this point, don't have, short on the brain here because, it can go higher. The stock was a lot higher a few years back.
All right, let's do some quick hits here. Ready, Andrew? This is our speed round.
Let's go.
Here we go. Visa has been flagging nicely above its 8-day moving average after an ignited move on earnings. How would you approach it?
The 70-80 call spread I think looks good. It's an in-the-money call spread. I make money if the stock's flat or goes higher. I think it had good earnings, and it's going to. If I wanted to play the banks, Visa or MasterCard.
Okay, Visa and MasterCard have been best in breed, and I tried to play it yesterday for a breakout above 180. It wasn't exactly ready for that. I'm still long Visa. If it gets back above 180, I might try and add again to it for cute cash flow.
And we talked about BlackBerry yesterday as a heavily shorted stock that has seen some nice action, and we did see some nice upside momentum yesterday. What do you think about BlackBerry?
I want to hear him because I feel like he hates the BlackBerry.
I do, but I think they're going to actually have decent numbers when they announce earnings at the end of June. I was looking at the July-June 16 call spread, thinking in between now and June is probably going to stay around this 15-16 range. But then I think they might have good earnings when they comes out June 28th.
Well, I know there is a 3-day Boca event or some event in Florida, and there is a heavily it's shorted. People think that BlackBerry, the 10's not going to be great, it's going to be done, blah, blah, blah. P.S., when it moves, it does. And my guys have been gravitating towards it because it's moved well. So here we are coming into a big resistance. So I do agree with the call spread. I just think it might happen sooner than we think. If it gets above this 1650-ish, you could see some shorts get squeezed, and then your next level doesn't come back in until the highs here at 18. It feels like there are some people that have a vested interest. Every time I look at its worst, it gets upgrade, or people talk about a secret weapon like they did in Barron's. But overall, in this range, it just held halfway higher. It's coming into resistance. Let's see if any news comes out of that 3-day event. Maybe you get a nice active long trade.
Tesla is a prime example of a major short squeeze. What would you do with Tesla, Andrew?
I think the only way to play right now is to the long side, to be honest. I don't have a position on it right now. If you look at the chart, I was talking about it in my trading room, the doji candle there, buying above the doji candle or selling below it, and the buy above worked out. It's moved so fast. It's trading $67 on earnings, even after earnings. 40% short interest or 42% short interest. If I was to get short it, I would want to be buying out of the money put spreads. I can define my risk versus reward versus shorting it outright.
Yeah, and I think everyone on Twitter yesterday was saying, I'm getting short, and I think we were saying, short versus a level, because this is the type of stock that can make you a widowmaker. You have such a big short interest there, but meanwhile, the float's tight. They do have a great product. What'd you say, 25% of the people that test drive it buy it?
Yeah.
That's a pretty high stat. And I think that people do love it. And again, sometimes it's supply and demand when it comes to companies that have been public for only a few years. So I like what Andrew said about your pivots. If you go to earnings, I know Mark was trading it after hours. He made some money. Here's your doji. So all you really needed to know without opinions is if it got above this 75, 77, you could see another move. Same way yesterday, said if it got above 81, you could see another move, and now here we are opening higher. There will be some people that try and short it for cute cash flow, but just remember, a level versus a level, because trying to be cute can make you real ugly. And if you look how this stock, it just came public, right back here. So that means it's got a lot of stock splits. It has a lot of future in front of it. So don't just be bare on the brain. Same way with the 3D stocks. But anyway, I think that this if you learn how to trade this stock, it could help make your month and year.
Right. Well, it's great having Andrew on the show today. Thanks for your perspective. And Scott, any closing thoughts for our viewers as we head into trading today?
I just think that a lot of people have different approaches to the market. So having Andrew here is great, because it shows you that the two of us have a very active, sometimes short-term, sometimes intermediate approach to different sectors. And I could do it with equities and a little bit of stock, or no, I'm kidding, a little bit of options. Same way, you're an animal with all these different option plays. But there's different ways to do it, but people have to learn your system. Do you provide some classes and some education for that?
Yeah, we have a trading room as well, and we also are working on potentially doing Chicago-based boot camps as well.
Okay, so that's good. So you're giving people the opportunity to learn how to trade options the same way we're trying to give people the opportunity how to learn how to trade stocks. So this way, when the market's at all-time highs, everyone is not just hating the market. They're saying, okay, I'm learning how to approach it, because the market will be here down the road when we're not. So you might as well learn how to navigate it and just do it in a way that you feel comfortable. And some people love equities, some people love options, some people like a hybrid, but there are many ways to skin a cat.
And with that said, happy trading, everyone. Have a great Tuesday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.